Hi, I'm Marie Jacobs, and I am a realtor with Live Sotheby's Realty in Boulder, Colorado. I'm here with Bruce Simmons, who is my partner and an excellent expert in reverse mortgages, which are mortgages that are available for folks who are 62 or older. Bruce is going to give us a lot of insight. We're not going to take a long time, maybe under 10 minutes, just to kind of give you a high level view of reverse mortgages. And I'm going to start with just a story about Carol and Mike. And Carol and Mike are an 80-year-old couple, and Bruce knows them too because he really helped them out. Carol and Mike are 80 years old. They lived in Nebraska and they really wanted to come here to be close to their son. And they've been trying for years. And they didn't know anything about a reverse mortgage and that they were qualified and eligible. When we told them you can get a mortgage on your house, you can buy a more expensive house than your budget affords, and you won't have a mortgage payment. They thought it was magic. They didn't believe us. And then Bruce came along and saved the day. And he's going to tell you how he did it. Bruce, let us know. Give us the high level overview.
Basically, in a nutshell, a reverse mortgage is most of the time an FHA insured loan that's specifically designed for people that are 62 and over. And it can be used to purchase a home, which is something a lot of people don't know. They think, okay, well, I want to stay in my home. I could get a reverse mortgage and
Right.
stay
That's what you
here.
run
And
into most. Yeah.
exactly. But more and more people really can take advantage of this when they sell a home like the Carol and Mike, where they came from an area that wasn't nearly as costly as Colorado, and then they moved to a more expensive area. They didn't want to have to get a mortgage payment with living at 80 years old and have a payment for the rest of their life while they live in the house. So we showed them, well, you showed them, I should say, Marie, that this is an option that could really benefit them. And they were open-minded enough to not just throw up their hands, because so many people say, oh, reverse mortgages are terrible. No, keep an open mind, because a reverse mortgage allows you to get the home you really want. Basically, the way it works is they sold their home in Nebraska for what they cashed out with around 375 or 400. They used that, or a part of that, as a down payment on a $650,000 home here in Colorado. And then we give the reverse mortgage for the difference. And the nice thing about a reverse mortgage is no payments are required. It's payment optional. Some people do make payments, but most don't. So no payment is required. It's 100% non-recourse, which means that as long as they live in their home, they can never end up owing more on the house than it's actually worth. Because the way it works is it's not free money, right? A lot of people say, oh, this is too good to be true. Well, it's a loan against the house. Every loan is charged interest. That interest gets added to the loan balance and it increases over time because you're not making that payment, or the homeowner's not making the payment. So the interest still gets added to the loan balance, so the loan balance grows. Theoretically, it could end up that the balance exceeds the value of the home, although it's very unlikely given the fact that we typically loan less than 50% of the value on the homes. But
Right.
either
And
way,
if I can interject
yeah,
here so that people understand that if the value, which is unlikely because we're also appreciating between 6 and 10% in our market, so the house value is going up. And generally, what we see is the payment that gets added to your loan every month does not exceed even the appreciation we've gotten for the
that's
year.
correct.
So it's usually a wash. But if it could happen, you cannot get kicked out of the house ever,
That's
even if
right.
the house is way over mortgage. You cannot get that's a protection. And people don't understand that because in the 70s or the 80s, there was something that went around and people were not being able to stay in their homes. And
Yeah.
there's reasons for that, and they've been corrected. Let's say that.
Well, those weren't even reverse mortgages. Those were like equity sharing programs and things of that nature. So they think about that as reverse mortgages. The other black eye too was from 2008, because that did happen where property values tanked in 2008,
Mhm.
9, and 10, and they people owed more on the home than it was worth. And I've talked to people who I did loans for in 2005 or 6 or 7, and they said, yeah, in 2008 and 9 we were underwater, but we just stayed there, paid our taxes and insurance, because that's a requirement. When you get a reverse mortgage, you have to live there as your primary residence, keep up current on your property taxes, your homeowner's insurance, and maintain the home and keep your name on title. As long as you do those 5 things, you can never, ever, ever be kicked out of the home,
And
regardless of how much you owe.
even if one of you dies, if
Yep.
you're a married couple, if one dies and the other one is living there, even if that person is not 62 years old, but is the spouse, that person gets to stay. So there we're
Correct.
trying to correct this rumor out there that these are really dangerous mortgages, and they just are so fabulous.
Yeah.
Mike and Carol are over the moon with their
Mhm.
situation. And what about people who do pass away? Who owns the house?
Yeah, that's the biggest misconception people have is that they think the bank is going to take the house. No, the heirs inherit the home and then they decide what they want to do with it. They could sell it, and let's say the home is worth 800,000 and 500 is owed against the home. They could sell it for 800, pay off the 500 that's owed, and they inherit the difference. The bank does not keep the house. Now, if the heirs do not want to keep the house, let's say 500 is the value and 800 is owed, which is very unlikely. But if that happens, then they could just sign the house over to the lender and walk away. There's no
With
recourse on the
no debt.
estate or the heirs. That's right.
Right. That's so
However,
great.
they can even keep the home in that situation. Let's say grandpa built a home with his own 2 hands, and the grandkids really want to keep this home in the family, but the parents ended up owing more on the house than it was worth. They could keep that house by just paying 95% of whatever the value of the home is at the time. So if it's worth 500,000 and 800 is owed against it, they go get a new loan for 95% of 500,000, and the lender, well, the mortgage insurance pays the difference to the lender. So the lender doesn't lose any money. So they're not going to come after the estate or the heirs for any loss because they're not losing anything.
Wow, I learn something new every day. That's a little tidbit I didn't
Yeah.
know. That
It's,
is really great news.
yeah.
And this little tidbit of information is over now. So we're going to end this and let you know that we are Marie Jacobs. I'm from Liv Sotheby's Realty in Boulder, Colorado, and Bruce Simmons.
I'm the reverse mortgage manager for American Liberty Mortgage in Denver, Colorado. And you can visit me online or call me. Our information's below.